last topic that we had from our overview was, and we've touched on a lot of these, but common mistakes to avoid, Walker. You see everything, I see everything. We sort of laugh. We talk about things because you can't believe what some of the obvious things people do or mistakes. But I will just say, and while you think of a good answer, the number one thing that I see that buyers or searchers make a mistake on is not getting pre-qualified.
Okay. Yeah.
They just, you can tell 10 people go get pre-qualified and maybe 2 do. And they don't realize that, like, what I always tell a buyer is, if you're going to go buy a home, there's no real estate broker that's going to take you to look at a home unless you're pre-qualified.
That's true.
It just won't happen. Well, it's the same thing here. I can't take you to meet my $1.5 million seller if you're not pre-qualified. So
I think I agree with you in certain places, and it sounds like you've got great lenders that you work with. What I find is most lenders out there in the world are still of the mind of like, well, I can't pre-qualify you until there's a business. Like, I need to look at you in the business and pre-qualify the deal. And that was the default setting for the first 12 years that I was searching and buying companies, and it has changed. What year is it? So I'd say in the last like 4 years, it's becoming more and more common to say, hey, let me pre-qualify you, because it's someone who can, a lender can look at your look at your PFS and all the rest, and your income and all the rest of it, and sort of pre-qualify you for a certain amount. But Adam, I would say most lenders still aren't doing it, right? So if I get pushback,
there's enough good lenders. More and more are doing it, and that's where I think you got to rely on the broker. The broker's going to say, here are the good lenders in this market, or here are the ones that work nationally that we know or we trust that you can get a pre-qual letter from.
Yeah, the other thing I would add here is that search funds, like traditional search funds, okay, and I mean, like, the double raise. I don't actually have any commitment, but I have investors I have backers, and it's multiple. It's not one. You can't talk to one, right? I feel like there's a reason why their average deal size tends to be between 10 and 15 million. Okay. And it's because if you talk to sort of, private market M&A advisors or investment bankers doing $50 million deals, or you talk to sort of Main Street sub $5 million brokers, both of those parties absolutely laugh at the fact that these people with no committed funding are looking for a business that that they can buy and run, right? So in other words, the first question of every seller is, do you have the money? First question of every broker is, do you have access to the money, right? And the thing is you can get it. You can get access to the money, right? And I accidentally made an offer on a $20 million business last week, and I don't have the cash, but I know places where I can get it, and we're working on it. But it's one of these things where, get pre-qualified for sure. And if you don't know where to get pre-qualified, call Adam, call me, whatever. Because you got to show that you got the money is the first part.
Yeah. What other common mistakes do you see?
The most common mistake that I see, okay, with business buyers is that they are trying to completely de-risk an acquisition. And the truth is that nothing that you're going to do is going to de-risk the fact that you're buying a business. Like, you cannot do it. There's just risks, okay? And you have to be able to look at the risks and identify the risks, and then get comfortable taking that calculated risk while you do this, okay? And if you can't make that leap of faith, you don't have the right growth mindset and the right mindset to be an entrepreneur, period. Okay, you have to make this leap of faith. Now, me included, I had to make that leap of faith, okay? And once you start doing it and you start living this, it's like leaving the matrix. You can't go back. You cannot do it, okay? And you will ask yourself, why didn't I do this earlier, right? And the truth is that the magic is not in the de-risking at all, right? It's in, what do I bring to the table? Going all the way back to the first thing you should do, attitude, aptitude, action. What do I bring to the table? Is this a good fit for my lifestyle? And do I feel excited about growing this business? And if you get those things lined up, like the rest, you should just wait very little, right? Like look at the risks, understand them, and make a calculated bet and go.
Yeah, for all the buyers out there watching this live or recorded, I can't tell you how many emails Walker and I and our colleagues get every week from buyers, searchers, et cetera, that I'm looking for the following characteristics. You know, I don't even need to start, but
Yeah.
now it's Amazon proof, high barriers to entry, a moat around it. We want it to only buy it for 2 to 3 times cash flow,
Yeah.
recurring revenue,
Management team in place. No
everything.
competition. No
White
competition. Patent.
White collar workers only, no blue collar. And about every month, I sometimes just write a snark email response, and I say, when that business comes in, you'll never see it because I'm gonna buy it.
Yeah, exactly.
I'm gonna buy it.
Exactly. I own, by the way, I still own 2 companies right now that I've acquired. Okay. And the thing is like I run one of them part-time. Okay. And the other one I have a manager in place. Okay. And I will just tell you that, I'm gonna quote my favorite documentary, Print the Legend. Okay. It opens up and the first quote is from the iconoclastic investor Brad Feld. And what he says is, when you're a leader, when you're a CEO, every day something comes up and smacks you in the face. And that is true. But there's no life that is I've just never seen a life that is more engaged than this one.
Correct. Well, I want to jump into some questions here, and then we'll have final comments. I got a couple questions that came up here. If there is old inventory that no longer is used for the business, but is included in the listing price as the seller is leaving the industry, do you advise the buyer they will need to purchase this old inventory?
No, if it's not sellable in the first 90 days, don't buy it.
Correct.
That's an extreme answer, but I would say that's where I always land is like, if I'm not turning it into cash in 90 days, I don't want it. And I might say,
we as brokers should be telling the sellers to be liquidating excess inventory before you even go to market or while you're on market, so they can capture the cash.
Sometimes
it's really old.
Sometimes I do. I just don't want it to manipulate the numbers so it doesn't look like real life. And what's funny is I had one seller who said, "Oh no, but you put all that on sale and it'll fly." And I was like, "Okay." And then we talked to the buyer and they said, he said, "I don't want it." And she said, "That's fine." And so she did it was a consumer products company. She did a buy one, get one free. Okay. And the business flourished. It grew another 20% while we were under LOI. And the funny thing was it was totally repeatable. Like you can buy this slow moving inventory and sell it for half the margin and just crush. It was great.
One more question. The broker always asks, do they have the 10 to 20% capital we talked about earlier for the down payment? The buyer does not currently have that, but they have the ability to obtain it through private funding. Okay. Do you, as the broker, discredit their interest?
It depends. If I've got a listing and I've got 4 buyers looking at it already that are competent with real interest, you go to the bottom of the barrel. It's just true, right? And by the way, I always have felt like this industry is going to barbell out, and the great businesses will get popular and sell for higher valuations, and the lower businesses will sell for lower. So I think the average purchase price in this market is not going to mean anything in short order. And I feel like I'm starting to see that. Are you seeing that, Adam?
A little bit. People want HVAC, plumbing, restoration, electrical businesses. They just do. And when we have one under contract right now, and we had a lot of interest, and some buyers got cute on purchase price, and ultimately it went for exactly what we offered it.
Oh, totally.
A little above actually.
Right. Yeah. The thing is there's a little bit of a hack to this, and it's something we teach in the acquisition lab, and it's not easy to do. Okay. It's just not. But the hack is that, he said 10 to 20%. So I'm assuming this is a SBA loan.
Yep.
Okay?
Yep.
So the hack is this: if you start an entity, okay, and you open a bank account, and then you get that, that financier to put the 10 to 20% in the bank account. Okay. And then let it age for 2 bank statements. Okay. No lender looks at anything beyond that. And now you have an entity with the cash in it, and it's yours. Okay. And let's just say you sold 19% of the company, you own 81% of this thing. Okay. And there's cash in it. Right. So that's actually the hack. And, you know, if it's family and friends, like it might be a little easier because you can be like, hey, here's like a side agreement where like I'm going to pay you interest later, or whatever your deal is, right? Like work it out. But you need the cash in the account in order to get pre-qualified to get the loan.
Yeah.
Okay. So that's the hack. Adam, I have an in-person meeting in 5 minutes that I need.
Well, we are wrapping up, so that's perft.
Okay, great. Went a little over, I think.
So I wanted to let people know how they can learn more about you, or this is the opportunity. You saw I had my Buy Then Build book. But for those of you out here who want to learn more, Walker, give it a ride.
Oh, you want me to pitch my own stuff? You know, look, what I'd say is that, like, you know, Buy Then Build is my mother's favorite book. It's a Wall Street Journal bestseller. Look, I mean, you know, I spent 10 years spending millions and millions of dollars investing in and running businesses, and then I spent 4.5 years writing the book, and it came out okay. So check that out. It's like $15 or whatever it is. We've got plenty of free resources on buythenbuild.com. I do have an online course, but the Acquisition Lab is kind of an elite accelerator where we've anchored in world-class education, group coaching, a suite of tools, just tons of resources, but also a vetted community. And in the last 18 months, we've helped buyers close on over 100 million in transactions. And so and I actually subsidize the cost currently, so it's not even profitable, and we've had 350 people move through it. So I try to make things of superior value at extremely affordable prices.
And if you want to get in touch with Walker or myself, any follow-ups, we will send out a link to, if you want to watch this again. I can't stress to you how many nuggets were in just casual statements. I'm a broker, been doing this for years. I've read this book. I pick up things in here. I can't encourage you guys enough to buy the book. Walker, has been fun. Really enjoyed it. Look forward to seeing you at some future conferences. And if anyone has any additional questions, reach out to Walker or myself. Just Google us. You can find us. And we really appreciate everyone's time and being here today. So thank you all very much.
Thank you so much, Adam.